Hello again and welcome to Money Tips. This is Charles Kelly bringing you money tips to help you save, earn, invest, accumulate and enjoy more money. As many of you know, I used to work in financial services. I was an IFA. I've done thousands of mortgages with people. I've arranged pensions, savings, all sorts of products. And, I worked for insurance companies, banks, different sort of institutions for 25 years. I'm not in the business anymore. I got out of that a few years ago and mainly deal with my own investments now. But I still keep an eye on things and keep abreast of the situation going on in that industry. And it gave me a lot of good knowledge. I've recommended in one of my podcasts to go and do a financial advisor course yourself, even if you don't want to become a financial advisor, because it will give you a real insight into the market, and you'll probably know more about financial services and all the products than 90% of the population, even if you do the simple basic course, which is, it's not degree level. The first rung of the ladder is not degree level. Later on you would be getting towards that, but you could easily do a sort of a level 3 type of course and get far ahead. But that aside, I've sold lots of different types of mortgages, interest only, endowment mortgages, repayment, investment mortgages, commercial mortgages, all these sorts of products. And it's interesting that after the last financial crisis, we also had a lot of self-cert mortgages where you certify your own income. But as you know, after the last financial crisis, a lot of these products just sort of disappeared. You can no longer get a self-certified mortgage, as far as I know, unless it's a very specialised lender. This is basically where you say, my income is 100,000 a year, and you know that nobody's going to check it or question that. Therefore, they would give you a mortgage based on that income, provided you're putting down usually a big enough deposit. But interest only for residential used to be quite common. I remember I had one mortgage where I had it on repayment, then interest rates went up. So I said to them, I want to switch to interest only. So they switched me back to interest only. And then I wanted to clear more of the mortgage off. So I went back to repayment. And then I got stuck with this mortgage, and I was paying, I think, £1,000 a month to the Abbey National or Santander. And interest rates weren't that high, but every time I'd paid a bit of the mortgage off, the term of the mortgage reduced. So it reduced faster because I was paying higher payments. But then I suddenly had I think it was like a 10-year, 9 years on my mortgage, but I was paying quite a high repayment on that, on a repayment basis. And I was paying about £1,100 a month. Then my business changed and I wanted to reduce my payments. I said, hi, do you think I could change back to interest only? And they said, no, you can't. Well, you can if you're in financial difficulty, then you'd have to speak to our financial difficulty department. And I said, well, I'm not in financial difficulty and I don't want to be marked down as somebody in financial difficulty. They said, well, you can't have it then. So I was stuck with this. So in the end, what I did, I was paying £1,000 a month for that mortgage, and I managed to get a remortgage with a different lender and on interest only. I think it was the Halifax. And I borrowed, I think I only owed about 50,000 on that mortgage. Remember, I was 50,000 mortgages. I was paying £1,000 a month, and I was up to there in it. I just had a lot of commitments at the time, so I got a remortgage for £150,000, and then I used the difference to buy another property. Now the payments on the new £150,000 mortgage, you know how much it was? I'll tell you, because you probably won't know. Interest only, £250 a month. Yes, I borrowed £100,000 more, and I paid £750 a month less, or £250 a month. Then I was able to buy another property using that as the deposit, and I earned, I can't remember, I think I earned £1,500 a month net in my hand from that property, which I turned into a HMO, and I've still got. Eventually I sold a different property and paid off the old mortgage completely, and I've still got that property. So in other words, like a no money down deal, if you like. But I always found it remarkable, the difference between interest only and repayment. And that was one of my most profitable deals, because it was so simple, so easy, and it was so profitable. Now, that, unfortunately, that type of mortgage is not available. If you want to buy a house yourself and on a residential mortgage, they won't give you an interest only, because they think the public is too stupid to know the difference between interest only and repayment, capital and interest repayment, and that they'll get to the end of the mortgage and they'll say, oh, I didn't know it wasn't going to be paid off. I never looked at all my statements over the last 25 years and I didn't realise the mortgage is still outstanding. I want compensation. Well, unfortunately, that does happen. Some people are looking for compensation. Some people, unfortunately, are a bit too dense to realise that an interest-only mortgage, you're just paying interest on it. You've got to find a way of paying that mortgage off. Now, on a buy-to-let mortgage, probably most of them are interest only, and buy-to-let investors are considered to be sophisticated enough, and it comes outside of the FSA rules anyway, but they're expected to be sophisticated enough to know the difference between interest only and repayment. Now, with the buy-to-let mortgage, a lot of them will get to the end and maybe sell a property to pay it off, or they'll just have the money at the end. Interest only used to be sold alongside an endowment policy, and they kind of went out of favour because the companies were not making enough money in the endowment to pay the mortgages off, etc. That's another long story. But in actual fact, there are companies now emailing people and saying mortgage, the next mis-selling scandal is going to be interest-only mortgages. And they're sending me emails now saying, have you had an interest-only mortgage? You could get compensation. In most cases in life, it doesn't pay to admit you're stupid. But when you're claiming compensation for PPI and mortgages, then yes, just claim you're stupid and they'll believe you and pay out. They'll believe that you are too stupid. Now, this is all very well, but in the midst of all this, it looks like some lenders are coming back with interest-only mortgages for residential mortgages, believe it or not. Now, the lenders, I think one of them is NatWest, I can't remember the other, but bear in mind this will only be for a small sector of the mortgage community. It will only be for very high earners and people with big deposits. Usually you'll have a 40% deposit and you'll be earning 70, 80, 90,000 pounds a year, and then they'll give you interest only. Now, I don't quite understand that, because the people who need interest only are actually first-time buyers who are struggling, because clearly, if you could borrow £150,000 and it costs you £50,000 where it costs you £1,000 a month, it would be advantageous for first-time buyers to use the interest-only route, would it not? Yeah. But no, they're not getting it. It's only the higher income earners who've got a big deposit. You probably don't need interest only anyway. But there you go. That's the logic of it. And I always find that when lenders pile into a market and start giving more generous mortgages, now this could be a coincidence, like interest only, self-certification, 8 times income, that's always where the market's at the top. And it's about, the bubble's about to burst. So if you see the return of 10 times your income, certify your own income, have interest only, have as much as you want, have 110%, then you know that the market's the end, because lenders, unfortunately, are not very imaginative. They jump on the bandwagon, they pile in when they want to keep lending money and throwing money at you. So when they start throwing money at you in a big way, you know that's the time to get out. So anyway, that's my little view there. I'm just being a bit facetious there, but I think that has happened many times I've seen over the years. And I've been in financial services for a long, long time, or I was in financial services. But there you go. Thanks for listening, and look out for those new mortgages coming on the way. Thanks for tuning in, Bunty, Gary there on Facebook Live. Great to see you, and I'll speak to you again soon. Thanks a lot. Bye for now.